Bitcoin, from a price standpoint, is not yet at an all-time high, even though it's knocking on the door of the all-time high. But there's a couple of other key metrics that we should be paying attention to that are hitting all-time highs. First, if we look at the chart for the realized price of Bitcoin, we crossed over a new all-time high, $22,100 for the realized price of Bitcoin. The way that the realized price is calculated is it looks at every single Bitcoin that has traded hands. And those trading of hands, it calculates based on the price at the time that it traded hands. So if I bought a Bitcoin from Joe at $100, that $100 ends up being the piece added to realized price. So for example, if I buy it at $100 and I hold it forever, it's only contributing $100 to realized price market cap. If I then turn around and I sell it to Joe at $62,000, now it counts as $62,000 to the realized price. So it's the last time that Bitcoin traded hands, what was the price? Add it all up, you get realized price. That has now hit an all-time high, $22,100. Very, very encouraging as you see some of these underlying metrics, these things around usage or transactions starting to hit all-time highs. That usually means that we are leading up to a price all-time high in the actual price for one Bitcoin. On top of that, we have the Lightning Network hitting an all-time high in capacity last night. It now is coming in at 3,101 Bitcoin actually locked up in the Bitcoin Lightning Network. Now, what this means is you have to actually lock your Bitcoin and put it as liquidity in the network to be able to send value, receive value, or route value. And so, of course, when you put a higher and higher amount, it means that the overall capacity of the entire network continues to grow. And so whether it is the realized price of Bitcoin hitting an all-time high or the Bitcoin Lightning Network hitting an all-time high, these are both very encouraging. And then if we go and we look at the actual Bitcoin hash rate, if you remember all the way back in May, China kicking out many of the miners, those miners having to unplug their machines and either move elsewhere or completely go out of business. But now we see the Bitcoin hash rate has come roaring back. We now are somewhere near where we were at the beginning of the year. And so to continue to see this massive growth in the Bitcoin hash rate, even though one of the largest countries in the world had an abrasive attack against it, is very encouraging. This network is resilient. This network is going to continue to become more and more secure over time. And my guess is before the end of the year, we will see a new all-time high in the Bitcoin hash rate as well. Now, the United States has been very fortunate to step in as that leader. Over 35% of the Bitcoin hash rate now resides within the United States and likely to go over 40% in the short term. So what we saw was a massive geopolitical mistake by China, and the United States had an opportunity and it seized it. The United States is now the leader in Bitcoin mining. And so as we see that growth coming back online, most of that growth is coming online in the United States in a democratic capitalistic society rather than an authoritarian centrally planned one. And so when we start to look at all the underlying metrics of Bitcoin, whether it's the realized price, whether it's the capacity of the Lightning Network, or it is the hash rate, it is encouraging because we are seeing an increase, a positive impact of the fundamentals of the asset. The network continues to be more secure. More and more people continue to buy and hold Bitcoin. 85% of the supply has not moved in the last 90 days, which leads us to see all the new demand is only competing for about 2.8 million Bitcoin in circulation that are liquid and available to be purchased. How bullish are we right now looking at all these underlying metrics?
Really bullish, right? Like I think we've gotten past kind of all the FUD, right? When it comes to China and the hash rate and all that other stuff with Elon's previous tweets and everything that was going on, and the fundamentals look really good. All the ones you just went over, right? Whether it's hash rate or the supply squeeze, kind of the Bitcoin in circulation, all of that stuff. I think we're setting up for a really good end of the year and maybe even into Q1. Continuing on the bull run that we thought we were previously on before some of that stuff derailed us a little bit. But the on-chain metrics, like you just went through them, right? And Will and Dylan have come on the show in the past week, and they've showed us all this stuff, that the fundamentals look really, really good. Look, supply and demand, right? When the supply is really low and the demand heightens up from institutions, other players coming in, ETFs, et cetera, the price only has one way to go.
John?
Yeah, I mean, it's bullish. We've kind of been preaching to the choir at this point. It's amazing to see. The hash rate's something that's unique. Obviously, the U.S. is going to be the leader just based off the amount of energy that we probably already consume and the amount of people that are adopting Bitcoin in the United States. But then the next countries down the line, India, Russia, Japan, are all up there with energy uses. It's 145 exajoules. I think it is. And then the US is 85, and then it drops significantly down to 30. So it's no surprise to me about the hash rate. Where is it going? Where are people mining Bitcoin in the US? I expect that, though, a little bit to kind of disperse a little bit more globally throughout time.
I also think that it's really interesting how the hash rate not only has moved geographically, but also it feels like the conversation around mining has completely changed. It was being attacked both from there's a lot in China, and also from the energy impact. But now all of a sudden people are starting to warm up to the idea, wait a second, this could really help the oil and gas industry. There's a lot of things that could be positive for the environment. And also now if it's within the United States, there's this element of like, hey, we didn't like it when we couldn't make money off of it. Oh, now all of a sudden it's an American thing. Oh, now we really like it, right? And I'm not saying that that's the way it should be. It just feels like now folks, especially politicians and regulators, et cetera, that's one of the thoughts is like once they figured out how they could make money, now they're really excited about there's more tax revenue, more jobs creation, more economic prosperity.
I mean, what if Aramco gets involved in it?
Aramco's definitely getting involved. I don't know when they're doing it. I have no inside information, but Aramco is definitely going to get involved. The economic incentive is way too strong for them to continue to
Yeah, but like the whole thing for me when it comes to the United States specifically is like, and other countries for that matter, is like, this is clearly a growing industry that's here to stay, right? Like at this point, we're well beyond of like, hey, is this a fad or not? Maybe you can argue some of the things like if Bitcoin becomes the global payment system or whatever, right? There's a bunch of kind of nuance to it that you can argue over. But the idea that crypto payments and cryptocurrencies and crypto assets and the platforms that are built on top of them, those are here to stay, right? Like that's already been decided essentially in my mind, right? Not only from the talent perspective, but how much adoption it's already got and the growth trajectory. So why would you not want to be a leader in that space, right? Like it's already something that's happening. So the US deciding, hey, we're gonna try to get as much mining power as we can. We're gonna create regulation. We're gonna foster innovation in our country. Like that's a no-brainer to me. And if they don't do it, someone else is gonna do it, right?
Facts.
So they need to be the first one to adopt all of that.